If you want bigger transactions, I mean 50, 100 plus $1 million deals, then this is the video for you. We're gonna break down how we right now are working on a deal for $93 million across 1,300 units that can help our client get massive returns, while we personally think the bigger is actually easier.
Yeah, sometimes bigger is better.
Yeah, in this case it's pretty true.
Yeah, look, whenever you're trying to raise capital for a deal, it's counterintuitive, right? If you need $100,000 for a deal, that's hard. If you need $500,000, that's harder. So if you need $5 million, isn't that hardest? And the answer is not always, right? There's kind of like a period where it starts to change, like on that curve. In my opinion, that really starts to change when you get into the double-digit millions of dollars. So we're talking anything above 10 million. Things change. The math changes, the scale changes, even just the types of groups you go to for that type of capital changes, right?
Yeah, totally. Yeah. Like now we're talking to PE companies, family offices, you have bigger backing from investment banks, they're happy to give you money now, you have more negotiation power as well. But all you want is easier on the larger transactions, and not only for the raising part, but also for like the due diligence and like doing the process, because now there's probably a team behind you helping you do this transaction.
Yeah, so you're right though, the universe got bigger. Suddenly you're talking to all kinds of different groups about your deal that were not available to you, because they're not gonna waste their time. If the check size is less than 10 million, like you're probably not talking to a family office. You're not talking to an institutional investor, okay? So you've opened up all of those possibilities, but your team behind you is true too. Suddenly there's enough meat on the bone to bring these people to the table. And your sophistication just went up. What you're able to dig into just got more comprehensive. Absolutely. Yeah.
Well, capital now to buy better services and more experience on the whole like DD side as well. You didn't have beforehand, because like the capital was so thin margins, you couldn't afford to do that. And now you need to do that.
So you talked about the DD, right? So it's like in due diligence, we've got a real problem about risk when the deal is small. If you're looking at a 20 unit, 10, 12 unit kind of garden vintage apartment, and you have 2 bad units, I mean, you're screwed. Your entire pro forma is upside down, right? So it's kind of like the law of large numbers, and whenever we get up there and you're looking at hundreds or thousands of units, now you can afford to have like those really bad black swan events, and that one unit that's completely down for a while, that doesn't kill your pro forma.
It's like a drop in the bucket for you on the scale of the transaction you're doing, which is why for us, like we have clients that the smallest deal they even think about touching is $50 million. The smallest one they'll do.
Right. And also like think about this when you're doing like your site visits during your DD. If you're doing a smaller deal, like you're probably going to go look at every single
and we have.
And we have. We've walked in every single one of them and done the door knocks. But when you're doing a larger deal like that, first off, it's not practical. It's not like you're going to march around at all 1,300 doors and introduce yourself. But you're going to look at every floor plan. You're going to do random sampling, right? You're going to look for other areas that might be risk factors, right? Like so, top floor, is there like water leaks? Bottom floor, is there a foundation problem? So you're going to be looking for things like that, but you don't have to go into every single unit anymore.
So it takes you less time on that point. And also like for financials, you're reading the same document, like the same exact financials going through, you're looking for the same exact numbers, just on a larger scale with bigger numbers. So it shouldn't deter you or make you afraid of these large transactions.
Yeah, that's true. It's kind of put a zero, just throw a zero on the end. And from 10 units now you're at 100, right? Or 100 and you're at 1,000, just put 2 more zeros on. A lot of that's true. You will see like efficiencies that come out of the financials though. So like for example, utilities. You might get bulk billing, right? That's coming through that you won't get in a smaller one. You might see some other types of services that are added that you otherwise wouldn't see. So there could be some new line items, but really 90% it's the same thing. It's just bigger dollar signs.
Bigger dollar signs, but also bigger dollars for you as well as an investor, which is why you do these large transactions. And like, don't get us wrong, like, we think bigger is better because there are deals that are so many hidden bodies in larger transactions. There's more closet space for skeletons, which is why we will give you also the adverse effect as well on these large deals.
Yeah, I will say that might be one of the few drawbacks of larger deals, is you can hide things, right? You're going to see these big financial numbers, and maybe there's something going on there that you're going to miss. Whereas in a smaller deal, it's just too obvious.
Yeah.
You can't miss it. Yeah, that's true. I suppose I agree with that.
Yeah, because we've seen like small deals, people will mislead you on things. Like, oh, this is a lease agreement, but on this one, it's a different number.
We should do a video on like the top 10 misleading or ways to mislead buyers.
Yeah.
As a multifamily owner.
Stay tuned for that one.
But I'll give you like one of the top 3 right now that you see, and it's that they will give you these numbers and tell you like this is the cap rate that I'm hitting, but they are self-managed and they're not putting in an apartment manager.
Yeah.
That's probably one of the top 3 almost every single time. Yeah, I hit the cap rate, it's good. Look at the NOI on this property. And then you go look at the T12s and pull up the expenses and you realize like there's no payroll or labor, none.
Yep. And then also another one they hide with you is the physical versus the economic vacancies.
Yep.
This is not cap rate, the economic or the physical. Like, what is the real number behind that?
Yeah. Another good one is pass through like utilities, and they're like to use it to beef up the revenue.
Yep.
Well, look at my average rent, and I'm like 30% of this is utilities.
Right. So a lot of ways you can hide stuff, but it's any deal. So like what you're doing is going to happen. But it's nice we were saying before on these large transactions, you have a bigger team. Like you have us helping you, you have an AI system helping you, and normally often not, you have the bank and the PE company or the family office also deploying more support to make sure the deal doesn't go sideways.
Yeah, but just to get academic about it for a couple of minutes, this is why you use ratios, right? There are specific ratios that should stay true no matter the size of the project. There's some exceptions when it gets too small or too big. That's kind of like the barbell methodology, but like for the core, most properties, there's some ratios in like terms of what your expenses should be based on unit count, based on revenue, and you can spot some things here.
Yeah. So, more of the story, you should be aiming for larger transactions. You have an easier time with negotiations. We can save way more money on these large deals because like there's more meat on the bones to do so.
It's very true. Yeah, this deal in particular that we're working on has some uniqueness behind it in terms of how you found it. I thought that was pretty neat, and you're not going to find that in smaller deals.
Yeah.
Right? Like courts aren't going to get involved, and individuals and lenders, they're not going to go through like creative bankruptcy processes for something that's worth $2 or $3 million. I suppose an overly passionate borrower may, but the lenders aren't going to go for that strategy. The court's not, it's not going to happen. When you get in these larger deals, yeah, absolutely, some different processes show up.
Yep. And on that point as well, if you are a new investor, like I'm going to say it's easier in terms of your credibility is a big part of that. Like they want to trust you to be able to close the transactions. You have good backing, good sponsor, good brokers like us. It makes it easier by yourself, but you need a team for these large transactions. And it's not by yourself. It's like pretty obvious, I feel like, but it's so you know for sure. Like you need a team.
Yeah, probability to close, right? That's true. When you're doing a larger deal, they're going to look into your probability of closing, and it's not just do you have like the financing and the equity, but like do you have the sophistication to be able to see through this deal and get to the closing table.
Yep.
So there are some kind of shifts in terms of the underwriting when you're working with larger deals.
Yeah, because now it's not just the assets, but also you as well as the investor, which is why you're having a good sponsor, a good backing, a good brokerage team to help you as well with a lot of credibility. Gives you more certainty of closing because they now know, oh, if Chris and Jordan's on the transaction, we know it's going to close.
Oh, that's real. That's very real. When you're looking at the seller and they're saying, who do I want to go with, especially in a competitive environment? First off, if you're getting a good deal, someone else is probably competing against you.
Yep.
So, okay, we're going to compete on price, but we're also going to compete on probability to close, right? Certainty of close. And that's a big part of the team that you're working with.
Yeah.
If they look at you and they're like, this team hasn't done a lot of this before, but this team over here has, they might take a lower offer because of the certainty to close.
Yep, and we've done that many times. We've been in a deal that's less offer on table, but we have more certainty to closing, they picked us over other brokers and other sellers because we knew we can make the deal happen for them.
Yeah, I'd say like, especially in the markets that I've been active in for many, many years, when I show up and make an offer on a property, the other broker, I'll find the other broker representing me with their client. They're like, I know this guy. If they're coming in with this type of an offer, they're gonna close. I hear that a lot. That's a huge advantage. Plus, I love it when the other broker is selling me. So it's kind of nice.
Makes it easy for us. That's why we love what we do. But yeah, for long story short, right now we have a deal for $93 million, and we think it's so much easier almost every single front to do these large transactions. Now, drawback, it takes much longer. Like, it wouldn't happen overnight. We've been on this deal now for 4 months, 3 months negotiations before we got to a point where we're actually now working on it. So it takes a long time, but afterwards it's pretty standard. 30-day DD, 45-day DD, even these large transactions, another 30 to 60 days to close. Pretty typical timelines.
Yeah, that's true. I don't have anything to add. If you're not doing bigger deals, I mean, maybe you're doing it for a passion project. I don't know. I mean, for me, it's like I'd rather have more opportunity for appreciation. I'd rather have more scalability. I'd rather have more resources. I'd rather make more money.
Yep, make more money, and then make it really easy to understand this concept. Most of you right now probably started off doing single-family houses. You said to yourself, man, these are so small, I can't make any money off of this. I gotta upgrade to commercial real estate. Well, these are the same thought process, but from small commercial real estate, go to large institutional transactions. Same exact thought process, just as complex as each other, there's more zeros behind it.
It's true.
And that makes life so much easier. If your goal is to make $100K a year, this is easy math, and passive income, it's a lot easier to do that on these large deals than it is to do on little small transactions.
Yeah, absolutely. Also, you're less efficient on smaller transactions. Think about the same thing, but from the opposite angle. If you have multiple transactions or multiple sites, you may end up having to have like double offices, different personnel, porters living in both spaces. With a larger centralized portfolio, it's a lot easier to manage those properties.
Yep. So this is your sign to get into larger transactions. If you need any help in any place in Texas or the Sun Belt, we're here for you. This is what we do every single day.
That's it. That's all I got.
All right, see you in the next one.